Petrol and diesel prices have now been raised 4 times in quick succession, adding roughly 7 rupees a litre to your fuel bill. This is not an accident. The war in West Asia has pushed up global crude prices again, and countries like India are paying for it. If you are an Indian investor, this is the real lesson from this war. Expensive, unstable energy is not a one-off event anymore. It is a part of the world we invest in. And that is why governments, companies, and investors like you are taking electric vehicles or EVs and big batteries seriously, not as some fancy tech, but as tools to shield economies and your portfolios from the next energy shock. So when we say big batteries, we also mean battery energy storage systems, or BESS. These are basically giant power banks for the electricity grid. BESS stores extra solar and wind power when it's available and releases it when demand is high or when the grid is under stress. And when you follow that battery story all the way up the chain, one country sits right in the middle of it, and that is China. In this episode, instead of shouting EV is the future, we'll build a simple mental map of the battery and storage chain, so you can see which parts of this chain India can really benefit from and which parts are likely to be controlled by others. If you watch this till the end, you will walk away with a one-page lens you can use on EV or battery stock pitch that you hear, including the ones that sound too good to be true. Let's start with the basics. Think of a battery like a recipe. Step 1, you dig up the ingredients from the ground. Minerals like lithium, nickel, cobalt, and graphite. These are mined in very specific countries. So very few countries dominate it. For example, Australia and Chile in lithium, the Congo in cobalt, Indonesia in nickel, and China in natural graphite. Step 2, you clean up and process these minerals in large factories. This is where the raw rock becomes battery-grade chemicals. Step 3, you use these processed materials to make battery parts, the cathode, the anode, and the electrolyte. Don't worry about the names too much, but just remember these are key pieces inside a battery cell. Step 4, you take many cells and join them together into a battery pack with casing, wiring, and electronics. And then you install that pack either in an electric car or in a big container for a grid-scale storage. So 4 simple steps: ingredients, processing, parts, and packs. So where does China fit in this recipe, and why should we care? Many countries mine minerals, but when you look at processing and making cells out of them, China dominates that market. Public data shows that China controls around 80% of the global capacity for key battery material processing. For some parts like the anode, which is the negative side of the battery where energy flows in and out from, its share is even higher. It's over 90%. These factories that make this were not built overnight but over many years, supported by government policy, cheap finance, and a fast-growing local EV market. In 2025, China alone accounted for 13 million, roughly 70% of global EV sales. So what does that mean for you as an Indian investor? It means that for the next several years, most companies in the world, including in India, will depend on China-centered supply for cells and many materials. So whenever you hear EV stock or battery theme, your first question should be, how much does this company depend on parts coming from China? If it's closer to the China's part of the chain, usually that would mean more input risk. Further away from that chain can mean more local advantage for the company. Now let's turn this into a simple mental map you can use. Think of the whole EV and storage story as 5 different layers. Every company you look at will mostly sit in 1 or 2 of these. Layer 1, the raw material. This is the mining and basic chemicals part. The lithium, nickel, cobalt, and graphite that we spoke about. This is mostly a global game right now, and India is not a big producer as yet. As an Indian investor, you mainly feel this through changes in the global prices, but you never hear about it through some Indian mining company. It is a high-risk layer and quite hard to analyze sitting here. Layer 2, the cells. This is the heart of the battery. This is where the actual battery cells are made. This is capital heavy, technology heavy, and today is dominated by Chinese and very few global firms. India does have big plans and incentive schemes to build cell factories, But honestly, real capacity on the ground is still small and will take a lot of time. For now, most Indian companies are buyers of cells and not sellers. For an investor, this layer carries high execution and high policy risk. Layer 3, packs and system. These are those companies that buy the cells and build complete battery packs and systems. They handle the design, safety, cooling, software, and integration into vehicles of big storage unit. India has real engineering strength here. This layer can benefit from local demand while tapping into the global cell supply. As an investor, it is an interesting thing when a company says that they can add design or software value. But the thing to watch out for is, can it protect its margins when the cell prices moves? Layer 4, projects and EPC. These are project developers and EPC firms. EPC simply means engineering, procurement and construction. These guys design and build EV charging networks or large battery projects for the grid, often bundled with solar and wind. Many listed India infra and renewable players already know this kind of work. Your key question here should be, can they win and execute projects on time? Are the contracts and returns sensible after all the costs that they need to incur? Layer 5, owners and operators. These are utilities, grid companies and renewable developers that earn money over time from running charging networks or big battery systems. Their cash flow depends on regulation and long-term contracts, not just selling more gadgets every quarter. For you, this might be less glamorous but can offer steadier, slow-moving returns and stories. It's predictable if the policy framework is clear. If you connect this back to BESS, remember the giant power banks for the electricity grid we spoke about, most of the opportunity for Indian investors is not in the making of the cells, but in the layers 3, 4 and 5. Companies that build the complete storage system using those cells, companies that design and construct large storage projects, and utilities and renewable players that own and run those battery assets on your grid. That is where BESS quietly shows up even on your portfolio. Every time someone pitches you an EV opportunity, ask one simple question. Which layer is this business in? That one question alone will filter out a lot of the noise. So where does India actually stand in this whole chain, and what could that mean for your money? At the materials and cell making end of the chain, India is still starting out. We have policies and targets, but we still import most of our cells and key materials. These are early, high-risk stories. At the packs and system level, Indian companies have more room. They can buy cells from wherever they are the cheapest, add the value through design, safety, software. These can be more balanced growth stories if they have strong engineering and loyal customers. On the project and operator side, building and running charging networks, solar plus battery plants and big grid storage projects, India already has some of its strongest listed players in power, renewables and infrastructure. These tend to look like more steady, utility-style stories where regulation and contracts matter just as much as technology. Put simply, the closer a business is to mining and cell making, the more it is a high-risk, high-uncertainty bet. The closer it is to packs, projects and operating assets in India's power system, the more it can look like a service or infra business riding the battery and EV trend. None of this is a guarantee, but this is a simple map that moves you from the whole idea that EV is hot to asking whether what exactly does this business do in the chain and what kind of risk am I taking for the return that I hope to get. To wrap up, the war in West Asia and repeated fuel price hikes are a reminder that energy shocks will keep coming back. The world is moving towards EVs and big batteries as one way to protect itself, and China currently sits right in the middle of that battery chain. India is trying to build its own capacity, but for now, we will still rely heavily on imported cells and focus more on packs, projects and operating assets. For you as an Indian investor, the key is not to chase every headline, but to know which layer of this chain you are actually betting on, and whether that layer plays to India's strength or to someone else's. If this helped you build a clearer map in your head, share it with a friend who is also trying to make sense of the entire EV theme. And tell me in the comments what you'd like me to cover next. Once again, this video is only for education purposes. It is not a buy or a sell call on any stock. Please do your own research and speak to a SEBI registered advisor before investing. See you soon.